Hey everybody, Nick here. Just going on to another review here. I'm going to do the December top 20 review. So these all had actual uh, expiration dates, I believe, of Jan 20. That was almost all of them. We'll go through and check them all out. I think this is the first one I've done on this. So we'll kind of go through how I execute these and put them on. Um, and we'll go kind of see how we did and just give kind of a full review on this. So, very similar to the playbook review, we have the market expectations, uh, and it's pretty much the same recap. If you watch the newsletter one for issue 12B, you'll see that the expectations were similar. Um, when it comes down to doing these, the real goal here is just basically to sell these units when we reach these kind of big accumulation points to try to collect the proper amount of premium. So, if in previous issues, this one kind of always pops up. There's notes on current issue, and we'll kind of go over this here. So we added a new designation, market performed, to reflect the fact that the broad market macro trend is now down, and many blue chip names have fallen in sympathy. To suggest that some of these names would be underperformers when the macro downtrend is just a symptom of general market conditions would be inaccurate. We expect them to perform with the market. If it continues to fall, they'll fall proportionally. The market rallies, they'll rally in step. Remember, trade suggestions are listed as trade suggestions and intra-trend trade suggestions. The suggestions are correlated to trend. Trade suggestions are meant to join into vehicles deemed outperformers to offer passive income while waiting for aggressive entries. If the stock is viewed as outperforming, we believe you must be more aggressive with your entry in these situations. Great stocks don't generally give you great opportunities to enter. Inter-trend suggestions are meant to generate income in underperformers. They are also at times aggressive, as they are closer to current price versus what we view as an acceptable area to initiate a short, which again, you generally don't get high price entries in stocks that aren't doing well. Their stops are closer because of potential short squeezes or outside influences like stimulus or bailouts on price, which brings up the ranges for entry and target. These are for folks who rather just trade the stock on a macro basis. Note the window of risk for outperformers is much wider than underperformers and performers because outperformers can be downgraded to performers. A position that would still suggest ownership of the stock. For those near the program, our selection process is based on volume. Stocks with the highest volume over a determined period are selected for the top 20. Some will make the list, some will fall off. We'll update previous suggested trades as it relates to the outlook, changing price targets and stops, but not entry, as we see necessary. For position maintenance, stops should be placed directly below bullish entry ranges, and stops should be placed directly above bearish entry ranges. So that being said, as we go forward, we kind of go in and we'll see the uh, certain suggestions here, like Bank of America, right, is marked as an underperformer. It says, and we have a little description in every one of them. Inflation isn't falling fast enough for impatient central banks. Relief is not around the corner. It probably just ranges in the 20s. A move above 36 would support revaluation. Price need to rise into the range of entry at 34 to 36 before providing acceptable risk reward. Then the macro downtrend with a target of 2750. The intra-trend trade suggestion is to sell the Jan 36 naked call using a conditional position. Uh, Exit to buy to close the naked call at 3607. So if we see what it did, we can go. I just kind of put a line on here. So here's BAC. Um, so here's 36, right? This was mid-January, so I think price was, or mid-December, so price was down here around 31. We wanted price to rally up to this 34 to 36 area before selling the units, and it did. So if we go look, right, the option price is 15 cents, and this thing first opened at 31.76, and we actually got an entry on the 3rd of January, and it got short 100 at 36, and then obviously didn't get stopped out, and the call expired um, on the 20th. And so that one actually worked out really well. If we had a chance to follow it properly. Okay, I'm back. Apologies for that. Okay, all right, moving on. We had MRK, and MRK shifted animal health business, boosting bottom line. Recession-proof sector with consistent attractive dividend. Price will need to drop to the range of 90 to 102, providing acceptable risk reward in the macro uptrend with a target of 125. So, suggestion was to wait for it to drop to 102, um, and then to sell the 97.50 naked put with a stop at 89.28. It actually never happened. Let's go look at MRK. Yeah, so we see over here, right? This was mid-December. It just stayed up the whole time and never. And there was an earnings spike. It looks like there, but so that we never got an entry on that one. And so I think it says it here. Open at 119 and no entry. Okay, and so advanced, we got AMD coming up next. We expect AMD to track the broad market. Currently, the macro trend of the Nasdaq is down. Rest of the drop continuing to the low 50s. Move above 86 with support reevaluation. Price will need to rise into the range of entry at 76 to 86 before providing acceptable risk reward. For the macro downtrend with reduced target at 52. So this one was, let price get to 76 and then sell the Jan 74 call with a stop at 73.91. That one didn't happen either. So take a look at it. So as you could see, mid-December price just kind of hung around down below the whole time. It just never came up, and that thing actually expired. Um, the entry expired before it ever happened. Those units. So that one never got an entry, and therefore we never got to do it. So here we go. Going on to XOM. XOM was outperform, hold, and BTFT. So expectation of future energy shortages and increased profits despite economic slowdown. The EU price cap on Russian oil will be reviewed mid-January and adjusted if necessary. Price in the current range, entry of 84 to 106, provides acceptable risk reward with the macro uptrend with a target of 115. So the recommendation, suggestion was to sell the January 102 naked put with a stop at 84. Um, that thing opened up, I think, in the range, and it did at 105.26. So just inside of here for 212 for the option price. And so you would have gotten in that trade right on December 19th when you got this, and it paid off. You made the whole premium on it, um, and you actually, yeah, I don't think you ever took. Did you take open current long at 100? So let's see, 102. Let's go take a look at the stock. All right, so if you sold that put mid-December, the 102, it was definitely above it the whole time. So yeah, you took in that whole premium. So that was a good one. There you go. All right, moving on. We got Cisco, and uh, so again, you made 207 on it, right? Um, yeah. So okay, going on to Cisco. We have Cisco's market perform sell. We expect Cisco to track with the broad market. Currently, the macro trend of the Nasdaq is down. Risk could drop into the high 30s. A move above 49 with support reevaluation. Price in the current range of entry 45 to 48 provides acceptable risk reward within the macro downtrend with a target of 37. So this one was to basically sell the Jan 50 naked call with a stop at 40.53. It opened at 47.66, so it was within the range to do that. So you would have sold the 50 for 35 cents. And that one paid off. I think you got stopped on it here. Let's take a look at it. 48.53 was our stop. So it went up and definitely it got us. So if you were in it, it definitely the trade got stopped out. But you made some off of theta here, so um, you took about $10 home here. And so moving forward to Verizon. Verizon was an underperformed, sell avoid. There's too much competition. The commoditized industry with little potential growth. Uh, Risk of dropping to the low 30s and move above 47 with per reevaluation. Price will need to rise into the range. Entry 43 to 47 for providing acceptable risk reward within a macro downtrend with a target of 32. The recommendation here, the suggestion was to sell the 40 call with a stop at 40.07. So it opened at 37.33. It got filled and actually it got stopped out for a 50-cent loss uh, on, I think, the third here. So it kind of tried to struggle, but let's go take a look at it. Um, let's see exactly what happened. Hmm, strange. All right, so that was VZ, I believe. Yeah, so VZ, see, so yeah, it blew through the 40 here, and it just took a stop. All right, so that one got stopped out. Um, Going on to CSX. Uh, Rails for converted consumer spending is proven to be resilient. EPS growth of 11% per year over the last 3 years. Great cash flow price in the current range of entry at 31.50 to 32.50 provides acceptable risk reward within the macro uptrend, the target of 40. Suggestion was to sell the 32 put with a stop at 31.34. So that got filled for $1.35. If it took it when price was at 31.36. Um, with the stop at 31.34, and it did get stopped. So it was very close to its stop. Let's go take a look at it. CSX. So CSX was 31.34. Right, so it got filled mid-December, and it was pretty close to its stop in there. It just got pumped through on one day. So that one got knocked out. Here we go, going on to WFC. So WFC, here we go. Inflation isn't falling fast enough for impatient central banks. Relief is not around the corner. Risk dropping to the low 30s, a move above 44 would support a reevaluation. Price need to rise into the range of 42 to 44 before providing acceptable risk rewards in the macro downtrend, the target of 30. Suggestion is to sell the 44 naked call with a stop at 44.02. So when that opened, it opened at 41.34 and it did not get an entry, I believe. Oh no, it did. So you got filled on it for 61 cents, and you got back. If you bid it back for 5 cents, you got 56 cents from it. So you're doing all right. Yeah. So when that one actually paid off, so take a look at it. WFC selling the 44. See. Yeah, so WFC or mid-December, you know, sold the 44 as it ran through up to Jan 20. You were still below it, and you didn't get stopped out. Okay, moving on to Intel. Intel, we expect Intel to track the broad market. Currently, the macro trend of the Nasdaq is down. Probably just ranges in the 20s and move to 40 with support reevaluation. Price need to rise into the range of entry 36 to 40 before providing acceptable risk reward. The macro downtrend, the target at 24. So the intratrade suggestion. Remember, intratrade really just means you could have jumped into that thing at any point, right? So when these things are underperforming, it really just means that you can get into it right away, and just after you get it, so you don't have to wait really for this range to do it. So the 31 went for 15 cents. You could have just got 15 cents. You're going to bid it back for five here, and you made 10 bucks on it. But you didn't necessarily have to actually wait for it to go to 36.40 before actually doing that trade, right? Again, underperformers are, like you said, it's hard to get a really good entry, right? So you can just get in and just passively, make the premium there while you're waiting for it to actually go up to give a better, higher price suggestion or a higher priced entry for the short units, and obviously in a downtrend or in a macro uptrend, it's kind of flip it. So yeah, that never got stopped out. So here we go. Microsoft is actually, let's take a look at Intel just to kind of see what it's doing right now. TC, so recommendation was to sell 31s. Yeah, and as you see, I mean, that was mid-December, and it just stayed down the entire time. So, yeah, just to make sure everybody understands that. Okay. Microsoft. We expect Microsoft to track the broad market. Currently, the macro trend of the Nasdaq is down, probably just ranges into the low 200s. Move above 260 with support reevaluation. Price may need to rise into the range of 245 to 260 before providing acceptable risk reward within the macro downtrend with a target of 210. Again, it's intratrend market performing. So on this one, it you could have just jumped at any time, right? And so if you jump at any time, you're selling that Jan 250 naked call with a stop at 249.33. Um, if you look here, it opened at 244.86, which was just under the 245, right? So you could just jump in, or you could have waited a little bit, I guess. But if you had a got in right away, it was 677, which survived. You bid it back, and then made $672 per contract on that. So let's take a look at Microsoft. So there's a 250. Mid-December, you were trading right around here. I just stayed down the whole time. So that was a winner right there. Bidding back the units and them going out worthless or for bid for a nickel. So going on to Coca-Cola, KO, here we go, outperform, hold by fucking bit. It's a global staple that goes well beyond soda, recession-proof sector with consistent and attractive dividend. Price to drop into the range entry 59.50 to 62.50 before providing acceptable risk. Rewards in the macro uptrend, the target of 70. So this one was to sell the Jan. The suggestion was to sell the Jan 60 naked put, and to get out at 59.27. So KO, when it popped up, it was 62.83 on the first print. And again, looking at it, right, you are definitely above the 62.50. But if you had jumped right in, it was 32 cents. When you got it with the stops where they were, you got the units back for a nickel, and you got the $27 from it. And going to Comcast, so CMCSA. Uh, Shifting content, increasing promotional offers to show up following viewership, not working. Probably just ranges in the mid 30s and move above 42 will support reevaluation. Price would need to rise into the range of 38.50 to 41.50 and provide acceptable risk reward within the macro downtrend with a reduced target of 27. Before I do that, actually, you know what? Let's go look at KO real fast. Kind of see what the print was. So KO. Yeah, so KO, as you can see, it just stayed above that short put the whole time. All right. And then CMCSA, all right, CMCSA obviously was just sitting right around the strike point. Um, so when it first opened up, right, it was at 35. Again, the entry to sell those calls was 38.50 with a stop at 34.94. So because it opened at 34, it opened right at 34.57. you definitely you're definitely looking at that thing kind of knocking you right out, right? Because we were already we were already right there. And so, stop at 34.94. You got it for $1.05, but then it bid back right away, and it got stopped out for just a $5 loss because it was so close. Again, when these are that close, you guys, it's really just about waiting for it to get some space. So just like with the newsletter, when they open up right on top of their stops, just give it a little bit of time, let it fall away. You'll take a little bit less premium, but you're probably not going to get stopped out as easily. So that's just my recommendation on that. All right, going to Uber. So we got Uber. Uber administration's desire to ruin the gig economy is a hurdle. Risk of dropping into the high teens and move above 32 would support reevaluation. Price would need to rise into the range of 20 to 32 before providing acceptable risk reward within the macro downturn with a reduced target of $15. So this one was basically just to sell the Jan 28 with a stop at Jan 28 call with a stop at 27.87. Now it opened at 26.02. Um, and the stop was 27.87. So you would have sold it for 75 cents. It did get stopped down on January 9th for a loss of $21. Let's go take a look at it. So it's Uber on the 28th. Right. So Uber mid December, as you can see, it stayed down, but then it just popped right through on the 9th, and you took that stop. It was a small stop though, so for how much you got on it. Okay, so MRO is next. MRO is performed by hold. Expectation of future energy shortages and increased profits despite economic slowdown. The EU price cap on Russian oil will be reviewed mid-January and adjusted if necessary. The price may drop into the range of 22 to 25 before providing acceptable risk reward with a macro uptrend with a target of 31. So the trade suggestion was just to sell the 25 put with a stop at 21.96. Now it opened at 27.61 for a 50-cent credit. And if you had done that, you didn't get stopped out. You made $45, 45-cent credit right there. And let's go look at MRO so we could see where that 25 put was. So see, it stayed above it the entire time in December, and it never actually took out that stop loss. The stop was way down at 21.96. All right, Nvidia coming up next. We expect Nvidia to track the broad market. Currently, the macro trend of the Nasdaq is down. Risk of dropping to the low 100s and move above 176 would support the uh, revaluation price in the current range. Entry 150 and 176 provides acceptable risk reward within the macro downturn of the target of 99. The trade suggestion was to sell the 180 call. Um, with a stop at 175.95. So this opened at 165.72, which is right inside that range with that stop at 175.95. You get a $5.05 credit if you got in. It did get stopped on the 17th of January for $1.75 because of theta decay. So you made 330 per contract on that trade as well. So moving forward, actually, let's go look at NVIDIA at the 180 strike. Yeah, so you can see NVIDIA at the 180 strike. It stayed down for a long time in December before it's kind of started this rally where it's breaking. All right, moving on to Tesla. Twitter crisis, recalls, and overall Nasdaq weakness overshadowing long-term outlook. Risk of dropping to low 100s, move up 240 would support reevaluation. Price need to rise into the range of 210 to 240 before providing acceptable risk reward to the macro downturn with a reduced target of 140. So the intratrade suggestion was just to sell the 220 naked call with a stop at 219.88. Price opened at 154, meaning you got a 71-cent credit. That got bid back for 5 cents, making the $66 there. And if you look at Tesla with the 220 strike, we can clearly see that it never even got close. And so that was, successful execution right there. BKR is next. BKR, expectation of future energy shortages and increasing profits. Despite economic slowdown, the EU price convention will be reviewed mid-January and adjusted necessary. Price in the current range. Entry at 26.50 to 28.50 provides acceptable risk reward within the macro uptrend. The target of 40. The trend trade suggestion was to sell the 27 naked put with a 26.41 stop. So that opened at 28.70, right, which was right just above the zone here. So if you had taken the trade, you would have got a 57-cent credit right away, and you would have got a bid back for a quarter. I'm sorry, a nickel at 52 cents here. That's 50 cents in profit. And let's go take a look at BKR. So you can see it just stayed just above that strike the whole time. Right? In December, it just hung up there. So moving forward to Throughput McMoran, commodity company, companies love a weak dollar, specializes in mining copper and gold, both in powerful macro uptrends. Price need to drop into the range of 34.50 to 36.50 before providing acceptable risk reward. In the macro uptrend, the target of 55. The trend trade suggestion was to sell the Jan 34 put with a stop at 34.15. That opened at 38.55 and you would have gotten a 52-cent credit, which made it all the way to getting a bid back for nickel for a 47-cent profit. Let's go take a look at FCX. And as you could tell, it just is charging higher, right? And it never came down to those strikes. Okay, so moving on to Coterra. Expectation of future energy shortages. A lot of energy stocks here. Increasing profits despite economic slowdown. The EU price convention will be reviewed mid-January and adjusted necessary. Price in the current range of 24.50 to 26.50 provides acceptable risk reward within the macro uptrend with a target of 31. The suggestion was to sell the 26.50 naked put with a stop at 24.03. So when it opened at 24.45, which was just about in that entry there, right? If you had taken it, uh, you had a very, very tight stop at 24.03. You would have got 235 for it, but it immediately got stopped out for 260, resulting in a 25-cent loss. Again, it's too close. Don't take the trade until it gets a little breathing room. Save yourself the commissions. Save yourself the small stop if you can. It's worth just waiting. And the final one was Rivian. High vehicle costs and rising rate environment reduces EV demand and makes it an avoid. Probably just ranges in the 20s. Move above 47 would support reevaluation. Price needing to rise into the range of 40 to 47 before providing acceptable risk reward to the macro downtrend with a reduced target of 18. So it opened, uh, let's see, January. The recommendation was to sell the January 32 calls with a stop at 32.03. It opened at 22.53 with that stop up at 32.03 for 18 cents, which got back for nickel. And then you got the $13 there. And let's check out CTRA and RIVN. So CTRA, you could tell it just it got stopped out right away on this one. So, and then RIVN, RIVN obviously just stayed down and never even came close to that. So again, you guys, this is really just doing these. It's just about kind of jumping into them, right? Because uh, really you can just enter these trades for, as long as they are not too close to the stop or past the stop, you're really just, collecting the income while you're waiting for these things to actually make moves. Again, kind of like the current edition, says here, we have the designation of market performers and because we're in a downtrend and then outperformers and how they go. So it's just about getting more aggressive with these things to make those profits. If you look here, even if you just had one unit on all of these, you made $1,538. And that's just with one unit across the board. Now, we do have some follow-up stuff over here. where we took some ownership for stock on the other side. And so if we look at a couple of these, we're short from um, a few different stocks in the older issues and kind of where they're at right now. So right now uh, on BAC, we're short 100 shares at 36, so it's $15 in profit as of Friday, I believe. No entry, obviously, on these two on MRK and AMD. XOM currently has a long from 104.80 that we got ownership selling some puts, and that's up 855. There was a stop out on Cisco with some stock with at 134. But we'll keep up on kind of how all of these are going if we do take if there is ownership being taken on these things. Um, it just really depends on if you're trying to accumulate or not, right? And if you accumulate but you still don't hit your stop, then you kind of stay in it and just keep stopping and these things can get running. But that's kind of how this works. And if you guys have any questions, please, again, as always, write them in the comments and let me know. Happy to do all this and really excited to see any criticisms or comments coming in on how I can make it better. Thanks, everybody.